the Stock Market Morning Prep video for Friday, May 23rd. Well, today's the last day of the week, going into a long holiday weekend, the Memorial Weekend in the U.S. here. Hope everybody enjoys their long weekend. It's nice to have an extra day off. Markets are very rarely closed during the course of the year. I think you get like six holidays. Anyway, we did get a little bit of a move, continued move to the upside, but nothing really changed. Dow Jones up 10, NASDAQ up 22, S&P up 4, and the Russell up 10. But what does that tell you? That tells you that we're going into this weekend, volume is extremely light, and what happens is when you have light volume, the bias is always to the upside. So I don't suspect any change going into today unless there's some sort of a negative catalyst in the marketplace, and that would really affect stocks in a big way because there's really the bigger players are gone. But I don't suspect anything. Usually we get that holiday reversal like we had in Easter, and so far it's not showing up, and it may not show up at all. But we'll see. Again, it's just a phenomenon, but it does play out. It's fortunately we didn't see it this week, but. What do? Well, we continue to try to take the best setups possible while the markets digest what's going on. We still have market divergence where the IWMs continue to lag all of the other indices, as well as the Qs. The Qs have definitely picked up a little more steam to the upside. Would I be short the Qs? No. Would I be short Russell? Absolutely. I would definitely be short Russell. I am not, but if I were an index guy or a trader, an index trader, I'd be looking to short that index, if anything. So where do we go with the other indexes? Well, we're still at these major extensions, and we're about 26 points away from the 1618 extension on the ES, which I'll show that to you in the charts. So we could get there today. So I'm waiting patiently to see what happens when we get up to that area. There's a lot of buying going on now in a retail crowd in equities. You don't see it, and I'm going to show you a couple of indicators. Why? Because they're not pushing the markets. They're not pushing stocks up at these elevated levels. There's really no more juice left in the market. You might get a couple of pushes back up into these extensions in the indexes, but stocks really aren't moving, and you'll see it in the indicator that I'm going to show you. Gold continues to consolidate in this area. I like gold. But the problem is gold's in a symmetrical triangle and it doesn't really tell you which way it's going to break. So we're going to have to let price break out or break down, and then we're going to follow the price action of gold. I'm still looking at certain areas of home construction. You can see the ITB, which is the home construction ETF. But in black, this is the lumber prices. And yeah, lumber does matter, believe it or not. Lumber continues to fall. We did get a push up in the ITB. Seasonality, the builders actually start running into going into the summer months. This is their time to shine, and it's really not happening. If you looked at a lot of the building stocks, like the home builders, the XHB, which is the ETF, or some of the top builders like LNE, Lennar, Toll Brothers, they're not really. They're at the lows. They're at the 200-day moving average. So it's going to need a little bit more work, but when you see lumber prices start to turn, that's when you start. You can start getting a little bit more active in the home building space. I wouldn't do so at this moment for a day trade, absolutely, but they're not really moving. So I want to watch this space. Also, the solar space starting to pick up a little bit of steam for solar, JSO, JSO. So I'm watching that space as well for trades going into the next couple of weeks. As oil starts to really tick higher, so does the solar sector, because of the fact is that, well, oil is expensive, so people start flocking to solar. I mean, that's the thesis behind the move. But nonetheless, I am looking at that. Selling short relative weakness stocks that aren't doing well, like the WDC, stocks like that, SodaStream, they're continually doing okay. If you were short, up above, and you have to really, if you're short, you have to really wear it for a little bit because stocks didn't go anywhere. But they're starting to make some moves, and I do like some of that on the short side, which I'll be looking to trade next week. So this week was a very quiet week, but nonetheless, you get a couple of trades off, and you still made money for the week. So you don't have to trade every single day if there's nothing to be had right now, and it's very difficult because markets want to vacate the area, but you got bulls and bears fighting each other, trying to either push the market lower or push the market higher, and there's really no conviction on either side. Okay, all right. So let's go. Let's get back to the charts here. You can see this is the lumber, which is in black, and as you can see, it follows prices accordingly. And then, sure enough, we started to roll. And then so did the ITB. So let's watch that home building index. I do like that for a trade. New highs, new lows, New York Stock Exchange. Here's where we are now, and here's where we are at new highs. So as you can see, stocks are not moving. It's not me even watching the screens. I can see stocks aren't moving, but look at the index. New 52-week highs. So if we're making 52-week highs in the S&P, the Dow Jones, why aren't we making 52-week highs in stocks? So this is very important, and this should be a major red flag. Now, again, if you're trading the index, that's fine, but most traders don't trade the index, they trade stocks. So there's not a lot of movement in some of the bigger names in equities. So just keep an eye on this index as well if you can get it. This is actually a very good index and very reliable as well. Now, the VIX, very important here. The VIX is made yearly lows and actually broke at one point below 12. All right, now we had a low of 1106, closed that back above 1203, but it is starting to break below that Bollinger Band. That is a signal that very soon the markets are going to come across some decent volatility. We have extreme complacency, and inflows continue to come in from the retail crowd. Have to be very, very careful. Now, again, I could be talking about this for months and months, but no matter what, you still have to be careful not loading up the book too long, because of the fact is that this here is a warning sign again telling us just to be cautious. Okay, that's all. Not saying to short the market. I would like everybody to be on the right side of the trend, as we are all trend traders here. So continue to buy stocks, but you have to buy stocks with caution. Okay, that's what I'm saying at the moment until this market can realign itself. Gold continues to be in a symmetrical triangle. As you can see, 1280, 1320 really is going to need to take out either one to alleviate some downside pressure or upside pressure. Okay, so we need to take one of these two areas out, and then we can really start to get going here again. All right, so let's go into the index. Kind of quiet again. I know it's boring, but we have to still continue to do the analysis. Inverted head and shoulders still working. Not valid until it breaks, but we do have that pattern. We have the ascending trend line. Bank of Japan spoke 3 days ago, and that's really what happened and buoyed stocks a little bit higher here, guys, because we had a weakness in the yen, and now stocks started to rally for 3 days, and the yen actually sold off for 3 days. It's actually down now a little bit in the pre-market session. The bonds, love the bonds. We had a 3-day rally, and as you can see, what happened? Bonds just came right to the 20-day moving average. I'd be looking to buy bonds in any pullback, and if you are buying bonds, you could buy obviously the future, the bond future, or play it via the TLT, and that's a lot of guys have been doing. There is absolutely nothing wrong with this chart. It's quite bullish. We have that inverted head and shoulders that broke the neckline here, and of course we all know the 1618 coincides nicely with the head and shoulders target area of 142.27. I think we get there, not right away, but I do think we get there. If we take this area out this high, the first target will be that 1272 extension of 140.07. Okay, and that's another big red flag, guys, and we all know that. Bonds continue to make some highs, grinding higher, and when the markets rally, the bonds sell off. They don't even sell off. Very small, little sell off. So that's something again to think about. All right, so that's the ES, as you can see here. We're about 26 points away to the 1618 extension. This is where I'm going to be looking to actively get short. But again, when I mean actively get short, I want price to get up there, but also we need a trigger to the downside. We don't just sell short because price is actually getting up there. We want to sell short as the markets start to roll back down again, okay? Dow Jones had a nice day yesterday. Not yesterday, 2 days ago. We actually took back that sell-off, and we just kind of stood there right above the averages again. So let's see what happens with the Dow Jones. But you can see volume is non-existent in any of the indices here. And you can see that as well in the transports. Transports made new highs yesterday. Again, new all-time highs. We're in this bearish rising wedge here, and volume is anemic. There is no volume. Absolutely dead in volume. So it's another red flag. that volume confirms price, and price action is just drifting higher on no volume. Okay, and then we have the IWM, which is a mess in itself. As you can see here, no volume, and we drifted back up to the 200 SMA. We're above the 200 EMA, but we're still below the SMA here. So, and you can see here we have this one trend line here, we have this other trend line, we have this uptrend line, and we have this horizontal area. So lots and lots of overhead resistance. I just think that this here is going to either do one thing, one or the other. To me, I think it continues to make lower lows and lower highs, but we have to obviously be careful because every other indices that's trading up now can take the Russell back up with it. So let's see if the Russell brings everything down, or if the Russell starts to move back higher again. And the Qs, we have this big bearish rising wedge, and what can you say? Volume is light yet again, as you can see, moving higher. And a lot has to do with Apple and the Qs. I hate trading the Qs. I'm not a big index guy, but when I was trading it, I just stay away from the Qs now. It's just not even worth trading because it's heavily weighted in one stock. It's just not worth it unless you could really find something. Really find something, a great setup in that index. But as you can see here, lastly is the Qs, and we're just kind of breaking back above here, just sitting here. So, we got to be patient. Let's wait and see what happens. The ES is up 2.5 handles right now, so it looks like it's going to be just a grind mode all day. You might get a little weakness in the morning, but if not, I'm looking for either a quick pullback in the morning where people take a little profits and then a grind higher rest of the day. And I don't think that that market's going to do much of anything, again, unless there is some sort of a negative catalyst that comes upon us today. But I really highly doubt it. I mean, the market's very, very quiet the last couple of days, and I don't suspect doing anything going into the holiday weekend. But we'll see. You have to be in front of the screens for opportunities, so we'll be there all day today. Hope everybody enjoys the long weekend, and we'll have a big report on Tuesday. Take care, everybody.